think we are ready to start. So yeah, good morning everyone. Thank you so much for being here today. On behalf of FINYE Hong Kong, I'd like to first of all thank everyone for sacrificing their Sunday morning. So we really appreciate that, and we really value your presence. Uh, First of all, before moving ahead, I'd like to thank our venue sponsor, Bagaisa, for providing the venue and also sponsoring the coffee. So can we have a big round of applause to them? Yeah. And just to mention, it's so good to see so many familiar faces as well, and also new faces here. But I'd like to mention some special guests that we have with us here today. First of all, thank you, sir, Honorable Consul, for being here with us today. Satish, sir, thank you so much. And also, and also we have our very special guest, Mr. Rosis Shrestha, who is also a research assistant professor at CUHK. Thank you so much for being here. Yeah. Oh, sorry, PolyU. Yeah. Thank you for correcting. Yeah. Thank you so much. So before starting, I'd like to just plug in a little bit about FINYE Hong Kong and why we exist in the first place. So at FINYE Hong Kong, it was started in 2021. So it's fairly new organization. And the main mission of FINYE Hong Kong is to inspire, encourage, and promote entrepreneurship opportunities, especially for youth in Hong Kong, especially for Nepalese youths. So we do that through various initiatives. For example, networking, workshops, and coffee talk like this. And so FINYE Hong Kong is the Hong Kong chapter, but we are in multiple countries as well. Australia, UK, China, Japan, Middle East, to name a few. So for the first time, we will be doing the FINYE Summit in November as well, where all the entrepreneurs, all the professionals from across the world will be gathering together. So that will be on November, but we'll talk about that later on. So a little bit about Coffee Talk. Coffee Talk is an initiative taken by FINYE executive members. And this is designed to provide valuable insights into various industries through collaboration with experts. And today we have our very special guest speaker with us here today. And just to give you a little bit background on our speaker, so there's a rigorous process that we go through while selecting our speaker. And this is, I think, the first time we have chosen someone from our own community. And I think she is the first women Nepalese speaker in FINYE Coffee Talk. So yeah, we are very excited to bring you an insightful session with Ms. Soyena Dhakal. And to give a little bit background about her, Soyena brings extensive experience in private equity, and her role as a director at a leading APAC-focused private equity firm. And she also has a master's degree in finance from National University of Singapore. So we think she's very well positioned to guide us through the nuances of private market and private equity. So please join me in welcoming Ms. Soyena. So yeah, stage is yours.
Good morning, everyone, and thank you very much, Suresh, for the very kind introduction. I know it's very early on a Sunday morning, so thank you all for joining me while we take a look into the private markets. So here on the screen, you'll see four maybe familiar faces, right? You see Kim Kardashian, Ashton Kutcher, Serena Williams, Kobe Bryant. Now, these are all celebrities and athletes, but they have one thing in common. Would anybody like to take a guess as to what this could be? Well, they're all founders of their own private equity firms. Fun fact, I work with one of them. We'll take a look at it later in the presentation, but first let's take a step back. When we think about investments, we usually think of the public markets, right? These are your stocks, your bonds, your cash, right? Mutual funds, money market accounts. But there's also a whole other asset class in terms of investments, and that is your alternative investments. Alternative investments is basically everything that is not traditional investments. So you have hedge funds, private debt, real estate, infrastructure, commodities, collectibles like arts and wine, and structured products like credit default swaps and so on. In this session today, we'll be focusing on private equity, which also includes venture capital. Now, I'm sure a lot of us have heard about private equity, venture capital, right? These are big buzzwords, but what is it really? The easiest way to think about private equity is backwards. So it's equity invested in private markets, private companies. So these are companies that are not listed on the stock exchange. Private equity is, in fact, a very powerful investment strategy where they transform the companies and generate returns for their investors. So they're actually bringing in much more than just capital. They're also bringing on a lot of valuable expertise in terms of, value creation approaches. They could be, bringing in more talent, more people, the right sort of managers, could be, operationally increasing the efficiency of the companies that they're investing in, and so on. Now let's take a look at some of the fundamental characteristics of alternatives versus traditional investments. Let's focus on the right side of the screen. So alternative investments generally are illiquid investments. Illiquid investments means that you can't readily convert your assets into cash, unlike the traditional investments like your stocks and your bonds that trade daily, right? In private equity and alternative investments, there are also active owners. So these are fund managers managing the portfolio companies. They are very, very skilled, experienced investment professionals who manage these portfolio companies and also have, like I mentioned earlier, a very active value creation approach, whereas in the traditional investments, they're more passive owners. Next, the alternative investments are slightly less regulated than the public markets, also have low correlation to the public markets. They do use a lot of leverage, especially in the case of buyout managers, where they could be taking 50 to 70% of leverage to buy the companies in addition to the equity that they invest in. Last 2 points, there's a high minimum investment requirement in alternative investments. For example, if you're investing in a private equity fund, the minimum required capital is usually 5 to 10 million US dollars. This could also go up to 200 million US dollars, where you see a lot of the bigger pension funds invest into a single private equity fund manager. And because of this sort of requirement and the type of market, the nature of the market, these are only open to accredited investors, which are professional investors who understand the risk and return profile of the alternative markets. Now, if you look at the size of the market, you will see very evidently that the public market is much bigger than that of the private markets. So the global equity market cap stands above 100 trillion in size, whereas the global private capital AUM you see on the green bar on the most right-hand side stands at 13 trillion only. On the graph on the right, if you focus on the green line, you will see that the private markets is actually growing in size and at a much faster scale than the public markets. Now, if you look at the risk and return profile of the different types of investments, you'll see that private equity in specific exhibit similar returns to that of emerging market equities and above almost all of the other asset classes that are available. And this is one of the reasons that more and more investors are looking into the alternative investments, because not only do they provide lower volatility, but also higher returns. So it's a great diversification technique for a lot of the big institutions to incorporate into their portfolio. Now, hopefully I've given you a little bit background on the industry and why it's such a growing and big industry that a lot of people are taking a look at. And now let's take a look at how it really works, right? So here are the types of investors that invest in private equity. These are, again, institutional investors and family offices, including pension funds, university endowments, big corporations, and so on. There are three main ways you can invest into private markets. One is investing in private equity funds, right? One is investing in a fund of funds that invests in multiple private equity funds, which gives you greater diversification. Or you can invest directly into the underlying portfolio companies. Now, on the right side, you see the list of strategies. These are the most popular sort of 6 strategies that are available in the private markets within private equity. So let's take a look at venture capital. Everybody has heard of private venture capital, I'm assuming. These are basically the venture capital funds investing in a series of young startup companies. Within venture capital, there are actually different levels of stages. So you could be investing in early stages, right, seed to Series A, B. Could be in mid-stage, expansion stage, Series B to Series C. And then a later, mid to late stage, pre-IPO as well. So within VCs also, there's a lot of different types, different stages of investments a fund manager could focus on. Moving on to buyouts, these are basically companies in they're in much later stage of their fund life cycle. So these are mature companies that are already showing stable revenues and so on, have a lot of track record. So usually private equity funds, they buy out these companies, fix the companies, exit them much later on. Growth equity is kind of like a gray area in between VCs and buyouts. So they have a little bit more track record than a young startup, but they're not as mature as a buyout company. Next, we have private debt. So private equity fund managers loaning to private companies. Real estate is basically, again, same structure as a private equity fund, but instead of, let's say, investing in a portfolio of young startups, they're investing in a portfolio of real estate assets. So these could be office buildings, residential, multifamily buildings, and so on. Infrastructure is a similar concept where, again, you're investing in, let's say, bridges, airports, utilities, and so on. Now, I really like this diagram. Basically, just piggybacks off what I already mentioned, but let's focus on venture capital, growth capital, and buyouts. Let's take a look at risk. So obviously, venture capital is a lot more riskier than buyouts because A, you're investing in much younger companies, right? So risk is higher. They could have no revenue almost in the beginning. So when investors are investing, they're inherently taking a lot more risk. And then obviously it comes down to buyout. Investment size, it goes up. When you look at buyouts, it's because usually in a buyout fund strategy, these fund managers are taking ownership positions of the companies. So they're not making minority investments or so on. They're making controlling investments, which means they need a lot more money to buy the company. That is why the investment size is also much larger when it comes to buyout funds. Revenue, like I mentioned earlier, venture capital could probably not be generating a lot of revenue, whereas buyout funds, growth capital, and buyouts, you'll see an increasing curve over there. Now, let's take a look at a typical fund life cycle. Usually, a private equity fund term is 10 years. So when investors invest capital, their capital is locked up for a period of 10 to 12 years. You'll see fundraising is the first part, right? Usually, they spend around 18 months fundraising. So this is when they speak to a lot of the investors, they have a lot of roadshows, they're answering, the due diligence questions of the investors, giving them comfort on, okay, this is the strategy, this is the track record, these are, the types of companies you'll be investing in, and so on. Sourcing and closing deals is basically the process where once they have all of the capital, that is when they start making these sort of investments where they're evaluating, let's say, 1,000 or 100,000 different deals and investing at the end of the day maybe only 10 to 15 portfolio companies. Obviously depends on strategy to strategy, but that is the period when they're actually deploying into the companies. The rest, 3 to 7 years, is spent on operating and growing these companies through various different levers. And finally, they exit these investments through 3 common ways. So one is through IPOs, right? One is through a strategic sale. And lastly, it could be on the secondary market as well. Now, enough of theory, right? Let's talk about private equity in action. So Blackstone is the largest private equity firm in the world currently and have been in for a very long time. So they acquired the Hilton hotels for $26 billion, And they netted a profit of 14 billion after 10 years. So this just kind of shows you the type of returns you get with the longer time horizon, with all of the value add that they add into these companies. So when Blackstone invested in Hilton, they saw that, okay, the hospitality industry is growing. Hilton, they looked at the balance sheet, they saw, okay, some of the debt could be restructured in a way. That is when they came in, they did a leveraged buyout, which means that they, they took debt to buy the company at 40% premium. They restructured the debt. They did a strategic management change, right? They brought in more professionals in terms of how to run the hotels and so on. And so basically, they made a lot of profit out of this investment. So this just goes ahead and demonstrates the power of financial engineering as well as operational improvements in private equity. Now let's take a look at another example. 3G Capital here is the private equity firm that bought Burger King. So at the time that they bought Burger King already operated in around 80 different countries and had 50 to 60 years of experience operating as the fast food hamburger chain that it is. But when 3G Capital took a deeper look into it, they realized that the menus were confusing, right? They were not opening as many stores as they should be in order to compete with, let's say, McDonald's. In fact, the revenue of Burger King at that time was half of McDonald's, but they were already the second leading sort of fast food chain company. So what they did was they bought the company, right? You can see 3G, they yielded nearly 19 billion on its initial 1.6 billion equity investment. So you can just see the type of value add that these professional private equity firms bring when they invest in these companies. They basically revitalized a legacy brand through cost management, capital management, new teams, and so on, through aggressive growth strategies, and they were able to deliver. Now, taking a deeper look at how these companies create value, there are several options, and probably even more. One is they strengthen the team, could be operationally improving these companies, optimizing the capital structure, so playing with the debt and equity ratio within the companies. They could be doing some M&As that could bring on synergies for the companies. They could be developing new products and could be expanding into new markets as well. Let's say, let's talk about RA, right? The Nepal airline flights. Maybe a private equity firm could buy them, right? Increase the operational efficiency through various ways. Maybe expand them into maybe more regions, obviously assuming that the cost makes sense and so on. Maybe change the team, maybe hire like a tech airline consulting to manage the internal systems and so on. So anyways, just an example, but there are different ways that firms can buy, right, change through different value creation options, and then exit the portfolio companies. So the experience and leadership ability of the private equity fund manager is extremely, extremely important. And at the end of the day, all of these value creations are reflected in a couple of ways on the balance sheet and income statements of the company, and this is through EBITDA growth, right, through margin expansions, free cash flow, multiple valuations of the companies, and so on. Now, let's take a look at the structure chart. I think this is pretty clear, it's something we've talked about earlier, but just to help you visualize it better, private equity firms, they invest in private equity funds. You have your investors who the private equity firms pool together, and then they invest in a portfolio of companies. Generally, to show skin in the game, private equity firms also usually invest between 1% to 2% of the fund size of the capital within to the private equity fund itself. So the most common structure in private equity, the fee structure, is 2 and 20, which some of you may be aware. 2% is basically the management fees, so that's what they get in terms of just managing the assets. And there's a performance fee, also known as the incentive fee, which is around 20%, which is called the carried interest because it's carried up by the profits. So 20% is received by the fund managers, and 80% of all of the profits go to the LPs, which is the investors. Obviously, the investors get it first, and the 20% carry is contingent on the minimum threshold, which is called the hurdle rate, which they have to meet. So 2% they get for sure. After they make all of the profits, 20% goes back to the investors, and 80% goes back to the fund managers. Hurdle rate is basically a minimum threshold of returns that they must meet before the general partners get any money back, basically. It usually is the case. Now, how do big institutions select PE funds? right? This is basically where I spend most of my time at work doing. So evaluating the track record of the fund manager, right? This means going over the performance. How has it performed historically? What do the numbers say? Do they reflect? Have they been consistent? Value creation methods. So you also want to see how they've created value. Is it just through taking a lot of debt and then, or is it through actual EBITDA improvements? What kind of, how does it work when it comes to different portfolio companies and so on. Investment team is obviously a very important aspect as well, because you want to see a team that has worked together for a very long time, who can synergize together to add value to the companies, but also manage them, operationally, financially, all of that. Deal sourcing and investment process also differs fund to firm. Fund to fund, it could be investing in a similar strategy, but could have a completely different deal sourcing technique. So you'd want to see, the breakdown of deal sourcing. Do they get to look at the deals first before their competitors, right? These sort of things. Benchmarking is also an incredibly important aspect. Benchmarking basically means how do they perform in terms of their competitors, right? Let's take, same vintage, means same year they founded the particular fund. How were the returns? Did they outperform? Did they underperform? Things of that sort. Investment strategy and market opportunity. So investment strategy is, have they been consistent over the many years of their operations, right? Have they changed from Fund 1 to Fund 2, Fund 2 to Fund 3? And the investment strategy should make sense within the market opportunity, the market landscape as well. Are they able to pivot, right? All of that. Last but not the least is your typical DD, due diligence work. So this could be the financial checks, operational checks, legal checks, ESG checks, and so on. Now, who are the big players, right? These are some of the bigger players: Blackstone, KKR, Carlyle, Apollo. And again, some of them are on the buyout space, some of them are, VC managers, some of them could be real estate managers, but all under the private equity umbrella. Now, last but not the least, let's come back as we are towards the end of the presentation at these groups. Now, when you see, let's say, Kim Kardashian, you think, what is she really doing in private equity? Is she qualified, right? Does she have the background and all of that? Well, just to give you an example, so she partnered up with this guy who's the former partner of Carlyle Group, which is one of the biggest private equity fund managers, and they co-founded Sky Partners with Sky with a double K because Kim Kardashian. But you would think, what kind of value add would she bring to her fund, right? So you have to, when you look at a private equity fund, you look at what kind of portfolio companies are they investing in. So here they're investing in consumer products, right? Media, hospitality, luxury. And what Kim Kardashian does is she has her unique take on consumer trends. It's a powerful celebrity tool that she has, that she can impact the underlying portfolio companies rather directly through her own marketing techniques and so on. So it's not uncommon that you see more and more people come into the industry. Obviously, she has to partner with somebody who really understands the operations of the private equity firm, and there's obviously nobody better than an ex-partner of Carlyle Group, which very smart guy. But anyway, so hopefully this gives you a little bit of a color on what is private equity, how does it work, why the industry is growing, as well as some of the key players and operation metrics. So with that said, it brings me to the end of the presentation. I'm happy to take any questions. Yeah.
You mentioned about debt restructuring. So can you give me an example of how the private equity does it, and how a normal people like us can we do it?
Right. Right, so the question is, how do private equity firms do leveraged buyout, let's say, and debt restructuring, okay, debt restructuring, and how can we do it on a personal level, right? If we can do it, okay. Thank you for the question. So first of all, when you talk about restructuring debt, I can use this as an example to help illustrate this point, but let's say Hilton, I think their debts were due in 2013, let's say. And obviously this was right before the financial crisis, right? But what Blackstone brought in was the power to negotiate different terms with the banks to extend these terms. So they restructured the debt, they had new maturity terms, and basically all of this in favor of the company, basically Hilton, and that is the financial engineering expertise that private equity fund managers, especially leveraged buyout managers, bring in. So they changed the terms of the debt with the backing of the private equity fund, obviously, and which is what gives the banks sort of a surety also that, okay, you know what, markets, whatever, we're backed, this is fine, and so on. So usually there's a lot of internal restructuring that could go on. On an individual level, obviously private markets is a little bit different, right? Private companies prefer to sometimes go to the private markets because they don't have an option to go to the public markets because maybe they don't have enough track record to show. There's a lot of regulations and so on, and that is what makes private equity, private markets appealing. With that said, on an individual basis, the way to sort of get in to a certain extent is through the earlier stages of even the earliest of the companies. So you'll see Shark Tanks, right? They're investing angel capital into companies that have just begun starting their journey and so on. So that is more on an individual level. Probably you and I could find a private company and try to invest, but obviously it's not very institutionalized as some of these big groups that also provide some sort of security and risk management and downside protection and things of that sort. So hopefully that answers your question. Yeah. Thank you. Any questions? Okay, attempt to in Nepali. Okay. So private equity भनेको चाहिँ अब सबै स्लाइड्स त जादिनँ तर एउटा चाहिँ ट्रेडिसनल मार्केट हुन्छ हजुरको पब्लिक स्टक हजुर सुनिरहेको स्टक्स बन्ड्सहरू सबै हामी हजुर सबैले इन्भेस्ट गरिरहेको छौँ होला तर अल्टरनेटिभ इन्भेस्टमेन्ट्स प्राइभेट इक्विटी चाहिँ अलि छुट्टै किसिमको इन्भेस्टमेन्ट्स हो जुन चाहिँ अलि इन्स्टिट्युसनल इन्भेस्टर्स ठुलो इन्भेस्टर्स जस्तो ब्याङ्क्स हुन्छ नि युनिभर्सिटीको इन्डाउन्मेन्ट फन्ड्स पेन्सन प्लान्सहरूले ठुलो इन्भेस्टमेन्ट्सहरू चाहिँ प्राइभेट इक्विटीमा गर्ने हो प्राइभेट इक्विटी भनेको चाहिँ इट्स अ भेरी लङ टर्म इन्भेस्टमेन्ट अघि भनेको जस्तै 10 वर्षसम्म put your capital in 10 years it's your lockup period you're not going to have your money back so it's a very illiquid form of investment and what that means is sorry English ma gaye नेपालीमा फिर्ता आउँदाखेरि चाहिँ किनभने लामो इन्भेस्टमेन्ट गर्दाखेरि चाहिँ इन्भेस्टर्सहरूलाई पनि त रिटर्न त्यत्तिकै आउनु पर्यो नि त एन्ड त्यही भएर चाहिँ रिटर्न प्रोफाइलहरू हेर्दाखेरि चाहिँ द्याट इज वाइ यस्तो ठुलो रिटर्न्सहरू हुन्छ अनि डाइभर्सिफिकेसन भनेको चाहिँ सबै इङ्ग्लिसमा भनिन्छ नि एउटा बास्केटमा सबै अन्डाहरू राख्नु हुँदैन बास्केट झऱ्यो भने सबै फुट्छ भनेको जस्तै डिफ्रेन्ट ठाउँमा इन्भेस्टमेन्ट्स गर्नुपर्छ भनेर नै मान्छेहरूले चाहिँ आजकल अल्टरनेटिभ इन्भेस्टमेन्ट्सहरू एकदमै पपुलर पनि भइरहेको छ किनभने इट इज अ फर्म अफ डाइभर्सिफिकेसन रिटर्न्सहरू पनि इट्स प्रिटी गुड सो द्याट्स इन एसेन्स प्राइभेट इक्विटी भनेको चाहिँ यो हजुरले चाहिँ एउटा प्राइभेट कम्पनीमा पब्लिक कम्पनीमा होइन कि प्राइभेट कम्पनीमा इन्भेस्ट गरिराख्नु भएको छ यो अन द मार्केट होइन अफ द मार्केट डिल हो हामी कतिजनालाई थाहा पनि हुँदैन किनभने इन्फर्मेसनहरू पनि हुँदैन सो इट्स अ भेरी सोफिस्टिकेटेड मार्केट्स फर बिग प्लेयर्स त्यही भएर पैसाहरू पनि मिनिमम चेक साइज पनि ठुलो नै हुन्छ मैले भनेको जस्तै 5 to 10 million US डलर चाहिँ एउटा फन्डमा हाल्दाखेरि चाहिँ युजली चाहिन्छ भेन्चर क्यापिटल फन्डहरू चाहिँ अब अलिकति थोरै पैसा पनि लिन सक्छ अप टु लेट्स से 1 million USD पनि लिन्छ बट दिज आर स्मलर प्राइभेट इक्विटी स्मलर भेन्चर क्यापिटल फन्ड्स द्याट आर टेकिङ दिज इन्भेस्टमेन्ट सो थरीको हुन्छ स्ट्राटेजिजहरू पनि कोही प्राइभेट इक्विटी फर्म्सहरूले चाहिँ यङ स्टार्टअप्सहरूमा इन्भेस्ट गर्छ कोहीले चाहिँ ठुलो ब्रान्ड्सहरू तर अझै अपरेसनली चाहिँ अझै त्यसको अन्डर पर्फर्मेन्स भइरहेको छ कि त्यसलाई अझै कसरी बनाउन सक्छ भनेर त्यो कम्पनीहरूलाई पनि उनीहरूले किनेर चेन्ज गरेर ग्रो गरेर सेल गरेर प्रफिट चाहिँ लिन्छ सो होपफुली त्यो नेपालीमा अलिकति समराइज भयो होला Yeah. Yep. Yes. You sir. Yes.
Thank you for the presentation. I noticed when you were talking about PE in action, you started So I was wondering about this to publicly funded enterprise. Um, if there's political will, how can PE foundations sort of improve their operation? Not
Right.
just popular
Right.
if there's political will.
Right. That's a great question. Thank you so much. So briefly, English में भन्छु है? So it's definitely possible, especially buyout funds हरूले चाहिँ take private गरेको धेरै हामीले देख्छौँ. So you see in the public markets, private equity companies take them, delist them, and make it private, and then they invest. So it is a strategy. So in essence, there could be a private equity fund. There are a couple in Nepal, like Dolma, like Team Ventures, and a few others that could buy out, given that there's no political, scenarios, that they buy out the RA business, and then incorporate a lot of value creation levers. Now, I would say that there are, I'm sure, private equity firms specializing in the airline industry that could do a much better job at revitalizing the brand. In fact, a lot of the private equity fund managers are specialists. So there are, for example, there's a specialist manager that invests only in industrial companies in North America. So what they do is they've garnered so much experience and expertise within this field that they can turn almost a company that has growth potential, they're able to execute on it. So I'm sure there are also a few, if not more, airline companies, airline private equity firms that can invest in RA, let's say, whatever sort of inefficiencies there are, they could turn them around. And then obviously sell it back to the government or put it into the IPO market and then get their returns accordingly. So definitely possible, but obviously would have to do a lot of due diligence work to analyze what kind of operational inefficiencies there are, how does the balance sheet look like, right, what valuation you'd want to buy the company at, and so on. So I'd be excited to see that actually. Happy to take any questions. If not, yep. So angel and seed funding, there's a very fine line. Seed capital is when VC firms start coming in, usually. So angel banking is usually an individual investor investing very, very early stage, whereas seed capital is when it's kind of like a combination of both, where you do see some venture capital firms investing in seed stages of companies as well. Yeah. Yeah, but you just don't see you don't see a lot of institutional capital in the early stages of the company, whereas in seed capital, it's, I would say, a pretty well-established sort of round. Yeah. Yep.
So since you have experience in this field outside of Nepal, and you also see that a lot of Nepali PVC firms are responding, right?
Right.
So in your point of view, how do you think they can make a job, get independent?
Thank you. That's a very interesting question. I hope everybody heard it, but basically, how can the private equity industry in Nepal also match up to the global private equity industry? So I'd say there are a couple of factors that needs to play together. So one is the entire ecosystem needs to be a lot more supportive. I think the Nepal government a couple of years ago finally established some proper rules and regulations and started giving out licenses to private equity firms to officially sort of start investing and take in FDIs, foreign investments, and so on. So it's good to see a lot of that, but there also needs to be a whole ecosystem that runs smoothly, right? It's just not enough for there to exist a private equity fund, because there needs to be portfolio companies that exist, and it needs to be a good deal flow. There can't just be one or two companies and there are 5 private equity funds sort of fighting for these deals. There should be a lot more deal flow, a lot of good companies, which I think is definitely possible because there is a lot of talent in Nepal and so on. So I think there's a whole ecosystem that needs to play together. I think private equity fund managers, like I mentioned earlier, there are I think 5 or 6 big names already who've been investing in a couple of funds, a couple of portfolio companies, especially on the VC side, that has been doing well. Like Tutul and Food Mandu and things of that sort have received venture capital investing, and they're making good money on those investments. Yep, thank you. I think there was a question here. हजुर Right. So त्यसको लागि चाहिँ अहिले the industry, like I mentioned earlier a little bit, the minimum equity size is quite large. So usually you don't see a lot of individuals invest unless they are ultra high net worth individuals with a lot of money. And usually they have family offices that run their capital. So those are licensed professional professional investors who are eligible to invest. But on a larger scale, at the moment, there are some, firms that have established that have opened access to retail investors, but it's still in early stages. There are a few companies that are doing it, but the access to the private equity firms is still sort of expanding. And I would say at the moment, it's still a majority of the investors, if not all, are still very, very professional, institutionalized investors and family offices. Yeah. But I'd say if you want to get into private markets, you can always invest directly, right? You see a good company, you can, it's a different process. It's not an institutionalized, everything is not out there. There's a lot of room for negotiation. It's more of a one-on-one sort of deal level kind of investments that will be, that's obviously open. Yeah. Yeah? Yep. Any? Hazard. हजुर 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 कुन तिनवटा भन्नुभयो अरे एउटा हेज फन्ड ओके ओके हजुर 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 So hedge funds say it's separately, it's a little different because they're investing in relatively liquid assets. So they short sell, long short hedge, they're actually investing in a lot of the times equities, but it's a different strategy. They're trying to maximize returns and they trade. No. They would invest in the public market. So let's say Blackstone, when they invested in Burger King, they took them private. So they took them off the stock exchange. So hedge funds, they'll usually invest in public equities and they trade to maximize their returns. They are, in a certain way, they are kind of passive investors because they don't operate, their agenda is not to improve and grow the company and exit. That is the purpose and the execution plan of a private equity. So that's the difference between the two. No. This structure is for private equity only. They're both in the alternative investments. So are a lot of other things. But this process of investing into a portfolio company, increasing value, all of that, exiting, buy, grow, and sell strategy is exclusively of private equity and not hedge funds. Yeah, you can come in and out sort of thing. They have a certain lock-in period for hedge funds too, but it's not as long as private equity funds, 10, 12 years. Okay. So let me नेपालीमा अलिकति. So private equity, let's say private companies हरूमा invest गरेर buy गरेर त्यसलाई grow गराउने. That is their main agenda. कि यो एउटा प्राइसमा किनेछ 10 वर्ष. No. Hedge funds are completely different strategy where they are not basing anything on the value, the growth value of the company. They are looking at, okay, what makes sense to buy now and sell later. If you think this is coming down, I'm going to short sell. No, okay. All private equity funds could be different, right? There are different strategies. Hedge funds also, they could employ different sort of strategies. But in essence, so for example, here they increase value and they exit, right? Hedge funds, they don't do any work on the ground. The reason that private equity fund managers are specialized managers is because they bring in the wealth of knowledge, operational value creation, expertise, and so on. So you think about it, private equity fund managers, right, who usually starts private equity firms? These are retired investment bankers who have worked in the industry for a very long time, who understand the nuances, the deals, and so on. So they are much more hands-on and much more operational. Whereas in hedge funds, they are trading equities on the market. These are relatively liquid assets that they're trading. So there's a fundamental difference between the two. So it's good, as an investor, it's good to have both in your portfolio, right? It's always good to diversify your risks and so on. But essentially, there are obviously very different concepts.
What if private equity go in the wrong way, in the wrong line?
Yeah, no, that's a great question because, yeah. No, it is true. There are some private equity fund managers that have gone bust. There have been cases where they've invested in portfolio companies and it didn't perform the way that they thought that, that they would do. And especially in the case of VCs, right? They invest in, let's say, 10 deals and 1 or 2 of them are the only successful ones. It's a very reasonable sort of, it's a common thing that happens, especially in younger companies. A lot of the times, the startups, they fail. So what happens to the money is, that's the good thing about private equity is that they're not investing directly in one company, they're investing in a portfolio of companies. So usually, if one goes bust, if one other makes a lot of money, it's actually done. Investors get 10x returns in one company, and that's usually, but, well, you're right, okay.
Like 2008.
Right. Yes, of course.
So what happened in 2008? Almost every market will do that, right?
Yeah, no, that's evident, obviously, right? Right. So.
What's the scenario of our fund?
Right. So like any investments, if hopefully not, but if the GFC sort of thing happens again, obviously all of the asset classes will be impacted. It's a fun fact to note, actually, private equity market actually decreased in its valuations, but in single digit, whereas public markets decreased in double digits. So you can see the resilience of the private equity investments only because they're investing in a much longer time frame, which kind of accounts for the volatility in the market. So obviously, if there's a market crash, long-term market crash, then obviously, the investors will probably have to wait longer before they get their money back because exits will be extended. The fund terms will probably be extended by 2-3 years. So yeah, hopefully that answers your question. Great, great questions. Anything else I can? Yep. Ajay. Right, thank you for that question. I was looking forward to hearing that one. So, private equity, usually to get into the industry, a lot of people will tell you that you will have to at least spend 2 years in investment banking. Usually that is how they hire the analyst level roles in private equity firms, 2 years of investment banking experience, a lot of on the ground work, and a lot of the skills are transferable from the investment banking business. But I'd say usually if you're also equipped with a certain degrees like CFA, you've passed 3 levels, you've done your MBAs or your masters related to private equity. There are a lot of MBA degrees specifically focusing on private equity. So these are also some of the methods that you can gain experience in. But I would say for most of the people, if you're interested in it, there are also a lot of available data on the internet. If you're interested to get to know a lot, to learn a little bit more about it. In terms of entering the industry, usually requires a little bit of experience, at least in investment banking, before you kind of step into private equity. As a Nepali, did I face? I would say I'm lucky to join a company where ethnicity hasn't really played too big of a role. But I would say in any industry, especially if you're a woman, you're entering into a meeting filled with really, really smart, senior level, mostly male-dominated room. So obviously there's a little bit of, I gotta pull up my tie, I gotta be extremely prepared. So there's a little bit of that, but I think it helps me push forward. So I don't think it's too bad. I've been seeing a lot more women in private equity too, especially at senior positions. For me, it's incredibly inspiring. There are a lot of private equity firms founded by women. There are also private equity funds investing only in women-led businesses that actually have been doing really well in terms of their returns. So I think that also says a lot. But yeah, hopefully that gives you a little bit of an insight. Thank you. Okay, thank you everyone. Happy to take, thank you. And I'm also happy to take any questions after. Sir, I know you have a lot of questions, so more than happy to take it after this as well. Thank you everyone.
Like one-on-one coffee talk available, I think. Soyena, right? Okay, thank you, Soyena, for the insightful talk. I think it was very engaging, right? I think lunch panisa, so please feel free to stay for the lunch. And just to plug in, we have a big update on FINYE Hong Kong. So this is the IES, so it's the summit that we will be organizing in November 29 to 30. So the basic idea of FINYE Summit is to bring all the Nepalese entrepreneurs and professionals from all across the world into one place and share ideas, knowledge, and experiences. So if you think this session was valuable, then I think we are going to have a lot of fun in the summit because we'll be organizing multiple panel discussions, networking sessions, industry insight like this, and much more. So we will be launching the tickets very soon, but please feel free to take a picture for the details. So the venue has been already fixed in Marco Polo Hotel, Hong Kong. So we will release all the updates via our social media channels and our website. And our website is finyehk.com if you want to get more details about getting membership or to get closer to us. It's finyehk.com. So yeah, we'll release more updates on social media channels. So thank you everyone. Have a wonderful rest of the weekend, and yeah, feel free to stay for the lunch and network. Yeah, thank you so much.